Hey, are you ready to know the direction of the day for the world's most traded forex pair, the Euro USD? Welcome, guys. Thank you so much for joining me on this beautiful Friday morning. It is exactly 8:30 a.m. my local time. That's right here in East Africa. But if you're using the New York time, and I believe it is currently 1:30 a.m. So every Monday to Friday, I jump onto these live streams to basically share what I believe is the direction of the day, or what's going to be the direction of the day, or what you would call the daily bias on the Euro USD. So if you are someone out there that maybe lacks clarity in terms of maybe your direction of the day on the Euro USD, definitely this is the live stream that you should be catching every single morning. So thank you so much for joining me today. And I really do appreciate. I appreciate you taking your time, to join me here on the live stream. And usually, as I share this direction of the day, I actually use my 50% win rate strategy that enables me call out, or basically call these directions of the day every single day. And if you're an ardent follower here, you know that 50% of the times I actually get these right. And basically, I use this 50% win rate strategy to enable me call the direction of the day on the Euro USD. And this particular strategy gives me a 1 to 4 risk to reward ratio. So if you are out there and maybe you aren't apologies, guys. Sorry for that technical glitch. Um, had some kind of disturbances, so I apologize for that. So basically, what I was trying to say is that with this particular strategy, I'm able to catch a 1 to 4 risk to reward ratio that enables me stay profitable in these financial markets. So if you are someone out there that maybe lacks a profitable strategy, definitely this is one that you could start using in your trading. So it is a very profitable strategy with a 50% win rate and then a 1 to 4 risk to reward ratio. So I would also like to talk to someone out there that if you are someone out there and basically you're currently going through frustration resulting from consecutive losses. I mean, you've been taking loss after loss after loss, and for some reason, maybe even your confidence is down. You feel like you don't want to put on that trade, that next trade. Please understand that losses are just part of the game. They are always part of the game. No matter the kind of strategy that you're using, at some point it is going to undergo some losses, some string of losses. They will always come. So be rest assured that this is only just for a number of days. And once this strategy that you're using gets out of this, then definitely you get back to your winning ways. So always have a long term focus. I mean, understand that this is a long term game. So it is only you, being able to focus on the long term, goals that you've set yourself. And this is how you'll actually persevere through this. So understand that losses are part of the game. This can happen to any strategy that you trade. So you switching from one strategy to another, it's not going to solve any problems, guys. So that you should have this at the back of your mind. So getting back to the strategy, as you know, I've told you it is a 50% win rate strategy with a 1-to-4 risk to reward ratio. So this is a very profitable strategy, and I'm going to be sharing everything about this strategy right here on this live stream. So we are going to be getting into that. And then maybe the other thing I would like you guys to understand that for me, before I even get onto the charts, before I start chatting in a day, the first thing I always like to check out, or the first thing I like to basically, acquaint myself is the fundamental side of the day. I would like to know what the fundamentals for the day are saying for that particular day. And basically, the website I use for this is this website right here. It is called Bloomberg.com. Now, on Bloomberg.com, basically, they are able to share some articles that enable you, get an overview. Now, for me, I'm purely a technical trader, but I do not want to be on the wrong side of the fundamentals. So usually what I do every morning before I even jump onto the charts, I like to see exactly what the fundamental side is saying, because the main reason I actually do this is for me, to look out for any major news or any major news stories that they could have, shared on that website. So basically, you come on Bloomberg.com, and then once you're on the website, you come under the markets tab right here. Then you can select out currencies. Then you're able to select out the particular currency that you're interested in. For me, I trade the EURUSD. So basically, I'm able to see exactly what they've written about the United States dollar or the euro. So this is it basically right here. So you can see. So basically, let me try and share my screen just in a bit for you to be able to see exactly what I'll be seeing on my end. I'll be sharing that just in a bit right now. So boom, I'm sure you're able to see my screen at the moment. So basically what I'm trying to say is that on this website, once you get to www.bloomberg.com, you can come under the markets tab. Then under markets, the markets tab right here, you check out currencies. Then you're able to see exactly the currency that you're trading. So basically, under related news today, which is the 23rd of August 2024, when you look at Bloomberg, basically shared about the yen climbs as UEEDA indicates that rates can go higher in Japan. So we're not concerned about that. Markets brace for rate clues from Powell. Okay. This is still nothing major, guys. I've told you I'm only and only looking out for major news. Huge political news, or maybe geopolitical news, or maybe any catastrophes, or any of those tragedies that might have affected maybe the euro or the United States dollar. So those are the kinds of things I'm looking out for. Other than that, I'm not concerned about any other, just minor news. I'm not concerned. So we can see U.S. stocks decline on wait for rate cut close. Okay. Okay. Earnings day closing bell. So Ghana, Paris Olympics hands Eurozone economy surprise boosts. Okay, this is good, but nothing really major. This is nothing major, guys. So remember, we're only and only checking out for major news. So I've not seen anything right here on Bloomberg.com. So then I jump onto this other website. Still, this is to do with fundamentals. So this other website is www.forexfactory.com. So it is the website I also use to basically enable me, filter out red folder news events. So you can see it only shows me red folder news events. So like, for example, today, which is the 23rd of August, 2024, my local time, that's 5 p.m. I believe that will be around, probably around, that will be around, that will be around, if we are to talk New York time, that's roughly around 10 a.m. New York time. So that's when uh, Fed Chair Powell will be speaking. Then we also have another red folder news event. This is all day Jackson Hole Symposium. So basically, these are the two red folder news events. Now, for example, at a time like this, if you don't want to be caught on the wrong side of the news, because sometimes, as these news events drop, some of the brokers that we use, they tend to actually, widen their spreads during that time when news is just dropping. So in case a particular trade happens to go against you, you might find yourself actually losing more than you had earlier anticipated to basically lose on that particular trade. So for you to avoid such a scenario, maybe of getting slipped more than you expected, because some of these brokers can slip you. Maybe if you had earlier anticipated to only lose maybe 10 pips on that particular trade, in case it goes against you, you might find yourself losing maybe 15 or maybe 10 pips more. So to avoid such a scenario, my advice, I would highly advise you to maybe stay out of the market, get out of that particular trade before this particular news event drops. So basically, this is the kind of routine sometimes I go through. So if you are someone out there that is always affected by this could be something that you could also consider doing. So basically, that is it. When it comes to the fundamentals, this is what I'll be looking at today. And then once I'm done with the fundamental side, this is when I actually jump onto the chart. So these are the charts, or this is the chart for today. And basically, when it comes to my strategy, it is a type of strategy that basically uses or utilizes the previous day's candle, the daily candle. So basically, on that previous day's candle, price usually leaves what I like to call an area of interest, an area where price on the next day actually likes to tap back into that area of interest. And then once it has tapped back into that area, then price continues or reverses in the other direction. So basically, this is something I'm always looking out for. And I realized or noticed that this happens almost every single day, guys. So it is the reason, I crafted my strategy around these areas of interest. So basically, this was the price action from yesterday. You can see it was very bearish yesterday. This was what price action looked like. So price actually opened right here. You can see price opened right here. Then it formed its high as this, then its low as this, and then finally price was able to close right there. So basically, that's what we had as price action for yesterday. This was it. It was very bearish, guys. So what does this mean? So for me, the thing I'll be looking at, if we are to look on this lower side right here, from the low of the day, you can see price kind of created equal lows right here, which I believe will be good areas of interest. So now those areas of interest that I've been talking about, these can either be maybe an order block or maybe a fair value gap, or at least maybe equal highs or equal lows. So now when we look at yesterday's price action right here, we can see that on this lower side of price from yesterday, there are some kind of equal lows right here. You can see there are equal lows right here. Maybe let me use something else. So you can see there are equal lows from here to here. So price likes to take out such areas. So what I'll be looking out for is for price. Now, once it takes out these equal lows, then there's also an order block here. So I'll basically wait for price to go all the way down. So I expect a major reversal to happen around here. So now for you, if you're out there, you can catch this entire move, guys. So these are quite some good number of pips. Let's try and measure. This is close to 51 pips, guys. So you can catch this entire move if price actually doesn't do this. So this level that I'll be looking to actually catch this reversal in case price gets to this level. That level is 1.10719. So that's the level. So I'll be looking or waiting for price to get to that level. If it doesn't, then I'm not taking a trade. Or if price actually doesn't do this, the other thing I would expect price to do is for price to actually come to this other upper side. So I'm expecting price to come tap into this area of interest here, which is a fair value gap. So I would expect price to come, come all the way up here. Tap into this fair value gap, and then once price at the opposite direction. So these are the two areas. So level number one is this right here that we've marked out at 1.10719. So once price gets there, then I'll be looking to actually react. Or if price gets to this other level, which is 1.11496. So once price gets there, I'll be looking to react to what actually price would have done when it gets there. So basically, these are the two major levels I'm looking at. So once price gets to either this level or this level, then what I do, because my entries are actually taken on the 5-minute time frame. So what I basically do is drop down to the 5-minute time frame, and then I'm able to, take my entry. And how I take my entries is basically, what I do is wait for what I call an inversion fair value gap. This is when price has actually, covered or submerged and a fair value gap that was previously existing. So once price does this on the 5-minute time frame, then I'm looking to actually make my entries. So when it comes to entry, my stop loss is usually 10 pips in the market, and when it comes to the take profit, I use 30 pips in the market, but I like to also squeeze this to at least a 1 to 4 to be able to make some extra profits from the market. Now, the reason I use 30 pips as a yardstick is simply because averagely or over time from experience, I've noticed that price at least moves 30 pips on a daily. When it comes to the Euro USD, on average, it at least moves 30 pips. So you're able to catch at least 30 pips from the market on this Euro USD. So this is why I use this as my target, but I like to squeeze this at least to a 1 to 4 to be able to make some extra profits. So basically, this is the direction I'm looking at for today. But in case price doesn't get to any of these levels, either this level or this level, then if it doesn't get there, then I'm not trading for this day. So basically, these are I say to myself, I have to follow religiously. So these are rules that I don't bend at all. These are rules I set myself. I mean, so many times I will tell you this, guys, because so many times you see people out there, there are so many times I've seen this. You see someone out there set themselves rules, and then guess what? They end up breaking their own rules. So if you are that kind of person, guys, I don't think you should be trading, because it is you who set rules or who sets rules for yourself, and then you end up breaking the same rules you set. This shows a weakness on your side. So try and improve this, or try and find a way of, abiding by the rules you've set yourself. So this is another word of advice. So in case you're out there and you are fond of breaking your own rules, guys, you should change that. You should be able to change something about yourself. So basically, this is what I'll be looking at. And in case you do have any questions for me, please go ahead, leave them down in the comment section. I'll be gladly answering you back. Remember to also, manage your risk right. Do not over risk on your trades, because this way you'll not become profitable. I promise you, you'll not become profitable if you're over risking on your trades. Follow a proper risk management, a proper risk management strategy that enables you stay profitable in these markets. So basically, this is it for now. I'm going to be wishing you a very good trading week and a good weekend as well. I'll be catching you Monday, same time, right here on the channel. Thank you. Have a great trading day.